Hi everyone, this is Jack, and this is my bar-by-bar review of the E-mini S&P 500 futures contract for Friday, December 6, 2024. First bar of the day is a big fucking bull bar. It's a pretty good gap up, and you know what? Now that I think about it, I think I called this gap up at my end-of-day review on the Russell, but this isn't the Russell, so that doesn't matter. But anyway, what happened yesterday was a triangle late in the day and then a couple of legs down. The second leg down was subdivided into two legs in and of itself, which explains why we gapped up. It's a failed bear breakout of a trading range. The trading range is here. Oh my God. Let me fix this real quick. Apologies. Bear with me for just a minute. Okay, let's do that. That's better. Maybe I'll make this a little bit thicker. How about that? A little bit better. Okay. Anyway, it's a failed breakout of a trading range, so the gap up is reasonable. It also happened around the higher time frame EMA here, which is the 221 EMA, which represents the 60-minute EMA. So we're holding that EMA. We're trending up, and we're above that EMA, so it's a bull environment overall. And the first bar is a big fat bull bar, so we're probably going a little bit higher. It's probably always in long, but first bar of the day, 50-50 chance that it's the wrong direction. So 50-50 chance we'll reverse down within a few bars. As always, better to wait for a few bars before you do anything. Bar 2, small pullback and then a rally, bull inside bar. Consecutive bull bars, but going sideways after a big bar, not ideal for the bulls. Probably we're still in a trading range because of this overlap and this hesitation and this pause, and we'll probably have to test this breakout point or this trading range high, and we may find sellers up here. So bar 3, another inside bar, this time a bear bar, could be a small bull flag, reasonable stop entry signal bar. For the bulls, it's a buy signal bar, though it has a bear body, but reasonable. And if you take that stop entry, your stop is down here. Skunk stop would be down here. And if we did reverse down below 3 or 2, it's likely that we'll find buyers somewhere, maybe at the breakout point or midpoint of the bar. Bar 4 broke out to the upside. It's a climactic bar. Looks like it is barely closing above the swing point here, the high of yesterday, and we're starting to turn down. We have this big tail here. So that tells me that today is probably going to be a trading range, and this is probably not the start to a strong bull trend that's going to last all day. Even though the EMA is rock hard and sloping up, I expect to find sellers up here. Small pullback and another rally on bar 5, another big tail, and that tells me that we may need to pull back after another bar or two. 6, outside bar, prominent tails, climactic behavior here. It's a big bar, then sideways. Big bar, and then sideways. Probably still in a trading range and probably need to reverse down, which explains 7. It's a micro double top with 6 and a strong sell signal bar, but we're not breaking out of anything yet. This is an inside bar. So if anything, I'm looking to sell a pullback, but I'm not looking to sell a pullback until we actually get a breakout. It's 7 consecutive bars up without any pullback, and I expect us to get an actual pullback after this bar. But we reversed up on 8. Pretty strong bull bar, but tail. Probably any bull that was long up here is going to be disappointed enough with this bar and this bar that we'll probably find more sellers up here. And that's what we got on 9. 9 tested the high close on 6 and reversed down. It's a big bear bar, but again, prominent tails and lots of sideways movement. It's a trading range. This is a tight trading range. This whole chart is a tight trading range. It's inside of probably a larger bull trend, but I don't really care about that right now. I care most about what's happening right here. And right here is a tight trading range. We could have an expanding triangle, something like this, and that. But in any case, we're probably going to go more sideways. Probably buyers below and sellers above. Traders bought the close of 9. And if we just look at what happened today so far, we have a big strong bull bar and sideways. Another big bar and then sideways. Strong bear bar, they bought it. And then a swing up. I say a swing up. Then a breakout up, but it failed. Big bear bar on 9, and they bought it. This is trading range behavior, and this range is super tight. So probably better for most traders to be flat. Wait for the breakout. another inside bar on 10, and then an outside bar at 12, but we're just alternating. Bear, bull, bear, bull, bear, bull. So what do you think is going to be next? Probably a bear bar. 13, bear inside bar, bull bar. 14, it's pretty insane how we're just oscillating bear, bull, bear, bull. It's crazy. But the triangle is now well defined. So this is more information, and this is useful information because now we can look for a breakout. It looks like we might have tried to break out to the upside, but this could still be within the trend line of the triangle if you simply draw it like this. And then 15, a shaved bar, which is a sell signal in and of itself, but a bad sell signal bar on 14. So probably this breakout will not get very far. It's also the first clear breakout of the triangle, and we may be going lower, but I expect it to pull back. 16, bad follow through for the bears, testing the bottom of the trend line on the triangle. Probably going a little higher, but probably sellers above. If you're a bull and you bought anywhere in this 2 legs up, you're probably super disappointed with this triangle, and you're probably going to look to take profits or get out with a smaller loss on any rally that we have. And then 17, outside down, but prominent tail breaking out far enough below the EMA. That tells me we're probably going to go lower, probably always in short, and also indicated by my indicator here. But we may need to pull back before we go down. You can think that we want to go down all you want, but that doesn't mean we have to just fall like a rock. We can probably stair-step our way there, or we may even rally before we get there. So 18, we're starting to rally. Traders bought the close of 17, looking for a second or third leg up. Could be a wedge bull flag with 5 and 17 here. But to me, this is a tight trading range that led to a bear breakout, and this is the pullback testing the apex of the triangle here. In fact, if you measure the top of the range to the bottom of the range, we are testing the midpoint of the triangle to the tick. I mean, it's just fucking fascinating what the markets can do and how precise they are. It's just unbelievably fascinating. Why is it that precise? It's incredible. It's obviously that precise because all of this trading taking place in front of us here is done by machines and computers. It's all based on math and logical behavior. So that's why it's precise. It makes sense. But anyway, it's important to recognize these patterns because they happen over and over and over again. Yesterday it happened at the open here. Yeah, you can see this. Small triangle here, broke out, tested the midpoint here. We reversed up briefly, but then we sold off. That's what's happening here. We broke out, but it looks like it might fail. Now we're reversing up, testing the midpoint. Then we get 19. 19 tells me that there are no more bulls to buy. If there were any bulls to buy, it would be above or at the close of 18 because it's 2 or 3 legs down at support, the EMA, and testing the stop entry signal bar 3. This would be the time for a second leg up if we were going to get one from here, but I don't think we are. We tested the high close on 18 and then sold off on 20, breaking out below everything to the left. We're overshooting the wedge that I drew earlier, but I still expect us to go lower. 21, a little bit climactic, so we may need to pull back here, but I expect some more down on the next couple of bars. 21's a big bar. It's a climactic bar, and it's got a big tail on it. And what happened here is breakout, pullback, breakout, pullback. We could be forming a parabolic wedge, so we may find profit taking down here. Also, you have to understand we're right under or right above 60.95. The E-mini likes to move in increments of 5 points. So because we're at this round number, I expect there to be hesitation. Inside bar 22, breakout, pullback, sell 23, probably still going lower, maybe forming a small triangle, trying to get a micro double bottom, but the channel down is just too tight. The overall context tells me trading range, but because of all this selling pressure up here and the tight channel down, I expect whatever rally we get to find sellers and to fail and sell off. 24, trying to get the breakout. Reasonable signal bar for the long, but I'm not looking to buy. We're clearly always in short and going lower, and this bar does not tell me that the bulls are in control. We have a prominent tail on the top of the bar and the bottom of the bar. Good sized body, but we need to get some follow through. Climactic follow through, we broke out. Well, first we pulled back, and then we broke out, and then we pulled back again on this bar. So it's already 2 or maybe even 3 legs up at this point. We have a pullback on 25, testing the EMA. We may go a little bit higher. It's a breakout test of the 17 low. I expect it to fail. Starting to go sideways, and then bear breakout 28. 28 is a great bar for the bears. The only problem is it's testing the low close here at 23. On a line chart, this is a pivot point, and that's where we're reversing up from. We tested that price and reversed up a little bit. I expected pullback and then a second leg down. Here's a pullback on 29. It's trying to test the low of 27, and we may get there, but again, we're well inside of the trend line for the bears, and this channel down is too tight, so whatever rally we get is probably going to fail. You could argue it's the start of a second leg up from this rally starting at 23, but to me, this is a breakout pullback short. 30, another failed breakout up just below the EMA, and then a big bear give up bar. 31 is 2 legs down. We're forming some sort of bull bear channel, maybe something like this, but I expect us to go lower. This bar is pretty strong, and it doesn't look very climactic to me. It looks fairly uniform with 28. Not really uniform with anything going on up here, but I think the character of the market's a little bit different here than it was up here. Sideways, buyers below the bar, probably scalping out. It's a breakout test of 24 low here on 32. Inside bar, 33. Then a failed bull breakout, 34. Could be 1, pullback 2, failed second leg, and we may be going lower. But instead, we tried to rally again. Now this could be 2 legs up, 2 or 3 legs up. Probably a bear flag, testing the breakout point, 29. And so far, looking pretty weak. If you're a bull, you got to be crapping your pants after this bar, man. There is no reason to be long right here. 36, good for the bulls, but inside bar and still below the EMA. And then a give up bar, 37. If you're a bull and you're holding through here, then you get 36. This is probably the last opportunity you get to sell high. And all the smart bears, the strong bears, know that. So they're waiting for this breakout test of the 29 low. And they're going to sell the close right here with a stop up there or here or maybe above the EMA even. So 37 probably going lower. Inside bar, then a bear breakout, 39. Tail, but probably still going lower. Trying to get the bull breakout on 40. Now we've got a little bit different characteristic. The character of the market is starting to get different here. And the difference, sorry, my screen just glitched out. The difference here with 40 is that it's overlapping the breakout point, the 32 open, the 31 close. On a line chart, this bar's close is above this swing point. So this breakout test has failed, and we're probably going to go higher. And this is a good buy signal bar. And for that reason, if you're short, it's 2 or 3 legs down, whether it's big or small or implied, 2 or 3 legs down in many different ways at some support level somewhere. We're just above the EMA. We're at this big round number, 60.90. Remember what I said about moving in increments of 5. We're turning up from just above this whole round number. We're probably going to go a little bit higher. So we get nearly a duplicate bar of 40 and then an outside down bar, 42. 42, probably strong enough for a second leg, but 39, 40, 41 may need a second leg first. And that's why we got 43. 43 is trying to flip the market to always in long. It's a big bar and scary for the weak bears. The strong bears know that we have 3 legs down and we need a couple of legs up to neutralize the market. So the strong bears are taking profits above 40 and then looking to sell again higher, probably above the 36 swing high or maybe the start of the channel, 30. Duplicate bar, 44. Good for the bulls, but climactic bar and tail testing the top of the channel and the bad sell signal bar, 27. High close, 27 here is a reasonable test target. Something like that. 45, testing that target and slowing down. Doji bar, channeling higher, getting follow through above that point, and now we're testing the high of 27, but failing to close above that level. Doji bar, reasonable to start thinking about shorting here. Overall trading range, but still below the breakout point, the bad sell signal bar, 18. I guess really the sell signal bar was 19, which is a bear bar, and that's pretty good. But in any case, we're testing that breakout point. Check it out on a line chart. The low close of 17 is still above the high close of whatever bar number we're at, probably 47 or something. So there is a gap here on a line chart. And gaps are a sign of strength. So 47, probably going lower, and then 48, we went lower. Good bar for the bears. It's a shaved bar, which in and of itself is a sell signal bar. I keep saying that in all of my bar-by-bar reviews when it happens, because it doesn't happen very often. And when it does happen, I think it's just interesting. Because look at all the bars on the chart. How many of them are completely shaved top to bottom? Really not many of them. Maybe 1% of all bars on any chart are shaved. And I remember in Al's first bar-by-bar book talking about shaved bars as being just a signal in and of itself, because it represents relentless selling from start to finish of the bar. And then a climactic bar, 49, probably testing the outside bar high, 42, small buying into the close of the bar, so we may pull back for a second leg down. Here's a pullback on 50. Now, if you're a bull and for some reason you bought up here like an idiot and then you held, but you bought more at the close of 49, you could have gotten out either break even or with a small profit here at the high of 50. And for that reason, this bar is a sell to close bar and sell above bar, because all these dumb bulls are getting out. And that's why we got 51. 52 turning up, but probably sellers above. Small pullback in a rally. Bit of a surprise, maybe a second leg up from the strong rally. 54 channeling higher, but getting smaller bars and smaller bodies. So that tells me we're going to find sellers. So 55, we've got a bunch of sellers. We're breaking out back below the EMA. Testing the low close here, 50, 51, probably going lower. Here's 56, nearly a duplicate bar, but tail, so we may need to pull back a little bit. We're getting back around some whole numbers, so we may start to hesitate. And instead, we get a climactic 57, again, testing this low 60-90 level with 39 and reversing up from the EMA. This is about the time I started to watch the chart today. And what I noticed was, and I completely forgot to mention it earlier because I'm just so focused on each individual bar, which is something for me to remember and work on. But what's happened here is a spike in bear channel, bear trend here with a trend line break. And now we have a double bottom testing the low of the bear trend, and we have a huge tail. We also have support here with the higher time frame EMA. We have an inside bar 58 that also has a prominent tail. And on a smaller time frame, these two tails represent a micro double bottom. We have a failed bull breakout and a good sell signal bar on 59. But the problem is we have this micro double bottom with a bigger double bottom at support after consecutive sell climaxes, after a trend line break and a test of the low. Everything I just said describes a major trend reversal, which is a swing setup. So it may be time to start thinking about buying. 60, probably not the buy signal bar that you're waiting for, but 61 is pretty good. Looks a little bit different on TradingView than it does on TradeStation, but I'll take it. It's pretty good. I'd be a buyer above that bar with a stop down here at 60.90. We've got a whole number. We've got the EMA, micro double bottom, bigger double bottom, lower low or double bottom, major trend reversal. This is a pretty good setup. Got the breakout but bad entry bar, but then outside up on 63. 63 was fun to watch. I watched this start to fail, and I told myself I would definitely be long on 62. So I pretended as if I were trading and I were long. And unfortunately, I'm still not trading because I'm having technical problems, and I'm still trying to figure it out. And it's a little discouraging, but I'm sure it will be resolved. And anyway, I was watching 63 hesitate down here at the low for a while. Probably, 2 or 3 minutes. And I remember checking my other screen, and then I look back, and we have this big bull outside bar. So I think all the bears realized that this stop entry here failed and trapped them, and then 62 and 63 started to fail, so they started to give up, and that's when we got 63. The problem here is there's a significant amount of overlap here, and really, this is the first real breakout bar of this tight trading range, and it needs to get good follow-through. And it is decent follow-through, but there's a problem. It's a doji bar, it's testing the EMA and not getting above it, and it has prominent tails on the top and bottom. So if I'm a bull, and I bought up here above 61, how do you think I'm feeling after 64? I'm not feeling too good. And probably I'm going to take off all of my profit at 1R instead of 2R, even though this is a lower low or double bottom major trend reversal, which is a swing setup, which means you go for 2 times your risk. Because of all this overlap and this shitty follow through in this rally, I'm really not interested in holding because all day it's been mostly bearish. I mean, there's a significant amount of buying pressure in here to justify holding a little bit longer. But what's happened here is not as important as what's happening here. And what's happening here is not the same as what's happening here. There's not much overlap with this bar, and there's a ton of overlap with these bars. So I expect whatever rally we get to find profit taking somewhere up here. Plus, we have a breakout test of the 51 low. The 51 low. And we didn't close above that level, so we may be failing here. Still sideways 65, and then big bear bar 66. 66, trying to test the stop entry signal bar, either 60 or 61. But it's a really strong bar, and it's probably going to get a second leg down. The only thing is, we have a lot of consecutive bull bars, and probably whatever sell-off we get will be minor, and we need a second leg up from this rally. You could argue we already have 2 legs up from 61. Here's 1, pullback 2, and then we have a few implied legs here. 66 strong enough for a second leg, but probably buyers below for a second leg up at this rally. 67, not ideal, honestly. And if you think about it, what happened here is a reasonable sell signal bar, not ideal. But this breakout, I mean, damn, we covered some fucking distance on this breakout. You know, the bears were feeling pretty good after 66, and they got a little bit more than 1 times the risk. Probably they got out early once it started to reverse back up. And that's when they started to cover, and we formed this buy signal bar. This is a reasonable buy signal bar for a stop entry long. But look at what happened here after the stop entry. We kind of went sideways, and we almost broke out to the downside, rally, but then pull back, and then climactic behavior here. So do you really want to take a stop entry here, or do you want to wait for the follow through and then get in on a pullback? And I don't know about you, but I'm thinking the latter. So 68, we've got a small doji follow through bar. It's testing the EMA and reversing down. Really not ideal for the bulls. I mean, if it's so bullish, why the fuck are we still below the EMA, and how come we're fucking reversing down on the first test of it here? Or the second test of it? Whatever it is. We're still consolidating below the EMA, and that's pretty frustrating if you're a bull. You know, I'm really not willing to hold very long. But then we get 69. 69 might make me a little bit rosy for the moment, but look at the rally here. You know, there's a lot of overlap here. We're barely breaking out here on 69, and we didn't close above this swing point. So if it's so bullish, how come we're not closing above here? And why are we going sideways on 70? You know, these are really interesting questions to think about. But, you know, whatever rally we get, we're probably going to find sellers. Failed bull breakout, reasonable signal bar for the short, but strong enough rally for a second leg up. Again, it's 2 legs up in an overall bear market or trading range, probably going a little bit higher. And now that I look a little bit closer, it could be a breakout test of the body on 66. And now we're testing the EMA from the upside. So this is better. This does change my attitude from, you know, a sour bull to more of a sweet honey bear or something like that, you know. But this is really not what I want to see. So maybe I'm just kind of an average bear or something like that. But anyway, probably buyers below for a second leg up. 72, failed bear breakout, probably going a little bit higher. Doji bar, not what you want to see. Now we're forming a tight trading range. Probably better for most people to be flat. If you're long, stop below 72. I'd probably get out on any rally above these highs. Deep pullback, bear breakout on 74. Maybe going lower, but tail and closing right around the EMA. So possibly buyers down here. Sideways on 75 and then 76. Breaking out to the upside and pulling back big time into the close of the bar. Really not ideal for the bulls, and reasonable sell signal bar for the short. Outside up on 77, big tail on the top of the bar. End of the day, really nothing to do except for watch at this point. We do have 3 clear legs up, and we're trying to break out of this bull channel, and that's what we did here on 78. And we pulled back into the channel on 78. 79, we tried to get back above the channel, and we're breaking back below it. Tail, probably going lower if I had to guess, but sideways here with an inside bar, and then another inside bar, 81. So interesting day overall. It was really fun to read, and I thought it was pretty clear what was going on for the most part. Pretty good trending behavior. You know, lots of overlap in some of the rallies. The sell-offs were certainly stronger than the rallies. I mean, you have a pretty good rally here, 43, bit of a surprise, and then a duplicate bar, 44. If you're flat, you get 43, 44. Do you buy the close, stop down there? I don't think so, because, you know, what are the odds you get up here before you get down there? I don't think it's 60%, and if it's not, you can't buy the close. It's a losing trader's equation. So, you know, pretty tough to do anything with that. And then here, I don't know that you buy 43 because it's barely over the EMA. And if it's so bullish, why is it barely over the EMA? You know, I mean, these are just fun questions to think about. And when I say that out loud, it's like, hey, yeah, that's right. You know, why? How come it's not that far above? And the answer is, you know, it's the first trend line break of the bear trend. This is probably not bulls buying aggressively. This is probably just strong bulls, strong bears stepping aside, trying to see how strong the bulls are. And we ended up double topping with 26, 27 and selling off again, testing the low. But we held the EMA and then a bull channel into the close. The channel looks pretty shitty. It looks like a wedge channel trying to break above and then failing. I don't know, reasonable for me to expect a gap down on Monday. If I had to guess, you know, that's just, I don't know, it's not worth anything. It's just fun to think about. Yeah, tough to do anything up here in the morning, you know, especially for me. My type of trading that I want to do, I only want to trade for a couple of hours a day. You know, maybe I'll extend it to 12 or 1. When I'm more in the habit, more in the flow of things. But, you know, I can just imagine being stuck in this sideways trading range for like an hour and just being, you know, totally bored and just like, God, what in the hell is going on? When are we going to get the breakout? And then you get the breakout and it looks shitty. Of course, you know, you're waiting all through this tight trading range. And then you get this shitty breakout. And you can't even, you know, trade the breakout with confidence. I mean, you get 15, it's a shaved bar. It's going lower, for sure. But, you know, really not what you want to see here. So maybe you get out above that bar. And if you did, I mean, you're just pissed at, you know, why did I get out? I mean, you're not pissed, you know. I don't think there ought to be any anger about anything that you do while you're trading. I'm just talking to myself, because I've felt that way in the past and it's never done anything for me. And the thing that's done the most for me is to just try to understand both sides of the market. You know, if I'm a bear, shit, I'm disappointed, man. I might get out above that bar. This could be a failed bear breakout. And if I'm a bull, I'm thinking, all right, this is pretty good. You know, I'm loving this. And then you get 17, you know, probably, if a stop entry triggers, to me, the stop entry should not come back to the open of the signal bar. Like here, 48. This is a really strong buy signal bar, and it's a stop entry signal bar for the rally here. And it worked, but it didn't work before it pulled back almost to the open of the bar. But look at what happened. It reversed up just above the open of the bar. So think about it. You know, look at 21. 21 is the signal bar for the rally. We had a gap down and then a small sell-off, but it didn't get to the open of the bar. You know, 30, strong buy signal bar. Didn't get to the open of the bar. Any of these bars, any of these sell signal bars, didn't get to the open of the bar. Here, you know, I don't know that anybody would put their stop here if this triggers, because this is such a small bar. Just put it up here. But the point is, you know, look at 66. Can you see that? Okay, yes, 66. The stop entry triggers, you don't know when in this bar's formation it pulled back. It could have rallied all the way up and then pulled all the way back down. You don't know. But let's assume it triggers and then it pulled back. It didn't get to the open of the bar. You know, obviously, 50, same story. The sell signal here, 42, that didn't touch the open of the bar. 30, that didn't touch. 36, that did touch, but, you know, that's not a very good signal bar. Here, 12. 12 is a stop entry signal bar. this pullback didn't get to the open of the bar. 3, this did get to the open of the bar, and look at what it led to. It led to a reversal. So it's just fascinating to think about that kind of thing. And then especially on days like today where you probably are thinking, trading range day, maybe bear trend, but it looks shitty all the way down, so you want to use a relatively tight stop. And that's one of my favorite things to do. If I'm going to take a stop entry, if it triggers, it should not get past the open of the bar. I think if it's a strong signal bar, like here, 61, I don't know if I said this earlier, this is pretty strong. That triggered, it didn't get down here. It's tougher with bars like 67 because the range is so big. So the open of the bar is in the sell zone of the bar, the upper portion of the bar. So do you really put your stop here if it triggers? No, I don't think so. I mean, what kind of person, besides a beginner, would take a stop entry that triggers and then put your stop here? This is just way too tight. So obviously you have to use, some sort of better rationale and logic than just, I'm going to put my stop at the open. You can't just do that. I'm just saying that, it makes sense that we didn't get here because this is below the midpoint of the bar. So maybe just call it the midpoint. I don't know. But on every signal bar, there is a point of invalidation. And here on 15, I think is why I started talking about this. On 15, if this stop entry triggers, are you going to hold if it starts to pull back beyond the midpoint of this bar? Probably not. Because if it triggers and pulls back more than 50% of the range of the bar, it's probably going to fail. I don't know. I forget the whole point in saying that, but just an interesting thing that I like to think about. And that's my bar by bar. Thanks for watching.